What's up, guys? In this episode of Toilet Talk, we have Toby from Wisdom Insurance. He shares what type of insurance pros should have, and you want to stick around to the end because he's going to tell you how to potentially save tens of thousands of dollars. All right, let's jump in. What sets Wisdom Insurance apart from the local agents or other insurance agencies?
Yeah, so Wisdom Insurance, our background and expertise and really experience in the industry, knowing exactly what to call the risk and how to classify vehicles, and then being able to compare to the local broker who maybe doesn't have any clients in the industry or just one or two, whereas we've got hundreds and hundreds of clients. That allows us to know exactly what insurance carriers to go to in order to get competitive and comprehensive quotes. So we're not wasting time unnecessarily. We understand exactly what our clients' needs are and what they value in terms of comprehensive coverage at an affordable price, right? So everybody wants a fair price. You don't want to overpay for insurance. And at the same time, you want to make sure that you're protected. So really our experience, this is our 12th year in business as an agency, really my 10th year specializing in, let's call it trucking and trucking risks. And then also just as an expert, from us, you're getting real service instead of lip service. So you're not running around in circles and explaining yourself as a customer over and over to an insurance agent that just doesn't really get it or understand it. And you can tell right away people value our questionnaire, because our questionnaire is designed and asking questions that are super specific to the industry. And so I think that is what really sets us apart is, our experience. We've been through it. We know exactly where to go with the risk exposure, and we're not wasting people's time.
So let's get into the juicy part. What are some of the scary stories that you can share about pros being misclassified by their local agent or insurance agency?
Yeah, so I would say business classification and vehicle classification are two of the most critical components of, any type of risk that has commercial trucking. So when you're talking about guys that are going out there and being classified as, for example, a trucker. Like we had a client who was a junk removal client in actually in Hawaii. They were carrying a fridge down the stairs. They tripped at the bottom of the stairs and dropped the fridge on top of a truck or a car, smashing the car. The claim got denied because under the commercial auto, because junk removal in the act of loading or unloading, you're covered under the commercial auto as opposed to the general liability. So the general liability coverage denied the claim. And then because they were misclassified as a trucker, the commercial auto policy denied the claim. So it created this gap in coverage effectively due to the misclassification. So those are the types of claims and scenarios that kind of keep you up at night, that are a little bit haunting, where you just look at, okay, being classified in the right class of business. So in that example, we actually reclassified that client under debris removal, which is the correct classification for junk removal companies. And that client went from $36,000 a year to $25,000 a year. So they actually saved 11 grand that they were being misclassified under this basically innocuous trucking classification. And each carrier is different, right? So knowing how to navigate those specific details really matter at the end of the day when it comes to insurance, because the devil is in the details. So when you're talking about the business classification, the vehicle classification, how the general liability is classified, whether the umbrella goes over the commercial auto or just the general liability and the workers' comp, those types of things really make a huge difference at the end of the day, and they can create gaps in coverage if you don't know what you're doing. Can cause your client a lot of heartache at the end of the day.
So the difference of being misclassified could literally be tens of thousands of dollars. So that is something
thousands, tens of thousands. And we can see that sometimes even in the vehicle classification as well. So, when you're hauling, running trucks, whether they're flatbed trucks or, what if they're over 26,000 GVW, we ask all that information up front. What we've been doing even lately is just having clients text us pictures of the trucks so we can review the trucks additionally before we put them on the books with a carrier to make sure that we're 100% accurately representing the truck and then also the business classification. So really those little minor details add up to make the difference. You want it to be fair. You also want it to be accurate, right? So the last thing that you want to do is be calling a vehicle not, and then claim time comes and now you're in trouble, or you don't have the permanently attached equipment accurately reflected on the valuation of the truck. So some of these trucks are now, we're insuring trucks that are $200,000-$300,000 in value, and they'll have $50,000 to $100,000 worth of permanently attached equipment. If that's not accurately represented on the applications to the carrier, it can cause a real problem.
So if you are a porta potty business, a septic business, a grease pumping business, you have the same types of trucks generally. So what's the typical insurance coverage needs for people in the portable sanitation industry?
Yeah, so the basics are, you've got your general liability, you have commercial auto, of course. If you have employees and drivers, you're going to need workers' comp. Commercial auto or umbrella is also, I would say, one of the basic coverage. And then pollution liability, you want to make sure that you've got a pollution liability policy. And then I would say ancillary coverages would be inland marine. So you want to cover your portable equipment while it's left behind. Yeah, any pumping equipment, anything like that. Mobile equipment is going to be covered under what's called an inland marine policy, which covers equipment, mobile equipment, rented and leased equipment is covered under the inland marine policy. So if you need to rent temporary, mobile equipment, you've got the capacity to do that and cover it under the inland marine policy. Cyber liability is becoming a real issue for small business owners. People getting their computers hacked and frozen up, and then ransomware being put onto people's computers and their email inboxes and that sort of thing. We're seeing a rise on those types of claims more now than we ever have in the last 2 to 5 years. I've seen more claims than I have in my 20 plus career in the insurance industry. So those are real risks that you need to be protected against in the right way. Crime coverage, employment practices liability. So if you have an employee who is accused of discrimination or um, or if you're accused as the employer of discriminating due to age, race, sex, religion, anything like that, you can be sued, and that's specifically excluded under your general liability policy. So the only way to have coverage for that particular exposure is to have an employer practices liability policy. So those are, I would say, as you grow and scale and become larger as a company, those are additional exposures that you might come across that you really need to protect yourself against.
What are the things that pros need to have prepared in order to get an insurance quote? And I know that you have a great example to walk us through. So if you could do that, that would be awesome.
Yeah, we definitely do. So we have a basic questionnaire, which is we kind of send out to everybody, and it identifies exactly what your it asks for your risk exposures, and then from that, it'll be vehicle list, driver's list, EIN number. It will be equipment list, your payroll and expected annual sales. And what we typically do is we send the client one questionnaire. It's a fillable PDF that they can then fill out. It's a 3 or 4 pager. They kick it back to us. And then from that one questionnaire, we can go to 5, 6, 7 different companies, 10 different companies, and start to get quotes. So it is one of the exciting things that we've seen recently in the industry is, even though rates have been going up and up, what we have seen is more companies coming out of the woodwork offering competitive quotes. So I go back, 5 years ago, and in each state we had maybe 1 or 2 options. And now we've got 4, 5, 6 options in almost every single state. So our bandwidth of insurance carriers and options, I think, have gotten much more competitive. And as a result of that, we're delivering more quotes than we ever have, as opposed to previously where we had just really a limited number of carriers that would, write the coverages. So our questionnaire goes out. You fill it out one time, kick it back to us, and we're immediately, our sales team is running quotes and the agents are running quotes. And then we're putting together the best, most comprehensive coverage at the most competitive price and delivering that. And then we reach back out to the client and review everything.
Can you go over some of the differences that pros might see by state?
Yeah, state by state, there's some really big differences in exposures, right? And more so now we're seeing, in the harsher litigation climates or legal climates, we're seeing verdicts that are just astronomical that have caused rates to increase, 2-3 times over the course of the last 5-10 years. So if you look back on the average per unit vehicle cost, we've seen in certain states those numbers just kind of skyrocket. I mean, Florida is definitely one of them. You've got the worst of all risk exposures in terms of you got a hurricane going in and causing $1 billion worth of damage every other year. You have no fault laws in Florida, which make it very difficult. You have the issue of uninsured and underinsured drivers who can't even afford to buy the insurance in Florida. So you've got a lot of really unique exposures in some of those southern states. So I would say Louisiana is one of the toughest. Florida's right behind it. Texas, Georgia, those 3-4 states right there really struggle when it comes to getting competitive pricing the commercial auto piece. And then you have other states like in the Midwest, where there are just a lot more carriers and options, and they might be a little more friendly. Ohio's like one of the cheapest states to do business in. West Virginia, Pennsylvania is really reasonable. And then you have Michigan, that's like a no-fault state. So California's a train wreck. California is always the most difficult. I think in all 50 states, we just recently got access to one or two. And when I say recently, I mean within the last month or so, of additional options in California. So we're really excited about that. But Washington State is also a real trouble state with regards to multiple options. And it really depends on just the unique risk characteristics that are involved in those different states. But I would say the number one driving factor is the legal climate, and how claims are handled and managed, and the laws that are on the books in order to determine those results. And then I would say the natural disaster kind of risk exposures. Home and auto rates in the Midwest are absolutely through the roof right now. We're seeing them double and triple, whereas traditionally those were always considered really stable areas, and it's due to wind and hail, and the natural occurring events like those are really making the property insurance kind of go through the roof in those areas. So it multiple different factors come into play depending on where you are at in the United States. But in terms of the industry, I would say those southern states are always traditionally the most difficult. New York, California, those are real tough states.
Can pros lower their insurance costs by implementing things like, dash cams, fleet software that monitors, things like that?
Yeah, that's a great question. Absolutely. No doubt about it. Every insurance company has their own specific program that you as a business owner should be reaching out to either the carrier or your agent to learn more about. And a lot of those companies offer just a flat rate discount for participating in their telematics program. Of course, there are all kinds of third-party options. And in general, it's great practice, right? When you talk about what makes you as an individual business owner a better risk in order to get lower insurance, it's implementing these best practices. So telematics is at the very top of that list. If you have the recording of an accident, you know exactly who's at fault, whether your driver is telling you they're at fault or not, or it becomes a he say or she say. You know where that's avoided? A recorded copy of that incident. So when you have forward facing dash cams and driver facing dash cams, you can see that the driver was on his cell phone. You can see, and also if you have telematics surrounding the entire vehicle, hey, you know exactly what's going on in the case of an accident. So you're not wasting time pursuing or telling a narrative that isn't true. You're sending the footage from the dash cam over to prove that you were not at fault in an accident. And the difference between at fault and not at fault many times can lead to we're seeing 50% increases when at fault accidents hit the books, 80, 100% increases. I mean, it can be really devastating to your business. So when you think about the use of telematics, and then also a lot of carriers will offer, 5 to 10, 20% discounts for the telematic portion where you plug a device into the truck and it gives you the feedback of the driver, whether they're hard braking or speeding or, quick acceleration, sharp turn, those types of feedback go to the business owner, and now you're knowing and understanding what you might need to do training on or focus on in order to have a safer driver out on the road and a safer overall fleet. So a lot of companies will offer those types of discounts directly. The insurance companies have their own programs for it. You just need to inquire. Things to watch out for and to ask about would be, do you have the ability to take action if we are driving poorly? So some companies, their programs are purely positive in feedback. Other companies can raise your rates as a result of poor driving. They can cancel you. So you just want to make sure that the company doesn't take adverse action as a result of participating in their telematics program. That I wouldn't advise would be a great thing, right? So those are some questions to just think about if you're considering implementing that. And then, of course, in that same scope is driver safety training, post-accident, having a formal written program that addresses all those issues, and saying, okay, if you receive a citation or a ticket, you have to participate in additional training that's going to get you back on track. Those types of things post-accident really make a difference between companies that would be considered best in class and driver best practices. So we really try to help our clients with those different respects.
What advice would you give to a pro that's maybe had trouble finding insurance due to past incidences, or their record might be scarred? I would assume they'd have to work to rebuild it, but what would you tell them?
Yeah, it's really it's really challenging if you have a list of drivers with troubled motor vehicle records and cab reports. It gets back to those implementing the safety programs. It's stricter hiring guidelines, and then turning drivers over that have poor driving histories. When you're making the business decision, you have a need and you've got to hire a driver, but are you sacrificing the integrity of a clean driving record as a result of just filling a need? So there's a high risk market, insurance market, that brokers can get to that involves going to wholesalers. So sometimes when you're up against, a lot of claim frequency or severity, and you're just struggling to get quotes, you've got to get to, carriers in that high risk marketplace in order to be able to get back to getting some competitive quotes. So the insurance piece of it can be really challenging, but it all starts with your business practices and who you're hiring and those sort of decisions that you're making in order to maintain a clean driving record and good driving history. So the insurance companies now, they get so detailed. They go into the cab reports. They're pulling your DOT filings. They're going through them in great detail. When a lot of times I'll call these underwriters to discuss a risk, and I've sent it over and they've got the DOT number. They already know everything about the risk before we even start talking about it. So it's made it from an insurance perspective, the data and the detail can be in the loss history and the cab reports. So those are scrutinized more now than they ever have been.
What's the future of insurance look like? And by the way, if you say AI, I'm going to end this podcast, but please go ahead.
Well, I hope to God not, because then I'll be out of a job, right? I don't think AI will replace agents anytime soon, because it still requires a knowledge and an experience and a history and really knowing and understanding your client, right? So for me to advise, people will ask, well, how much of an umbrella should I have, a 1 million or 5 million or 2 million? And knowing and understanding the net worth of the client, their fiscal, philosophy, their risk tolerance goes into creating an insurance program that fits their specific needs. So I don't think AI is replacing that anytime soon. In terms of the industry, we're seeing rate increases. We're seeing costs to repair vehicles higher than ever. The rates, I don't think those are stabilizing really anytime soon. One of the good things, though, that we have seen is just more companies coming out of the woodwork and really quoting risks that otherwise haven't been there in the past. So that's been one of the positives in the industry, is I feel like there's a lot more competition going on, which will help to bring down costs and keep costs down as more insurance companies get into the specific industries that we specialize in. So that's one of the positives. I mean, do we need it's always a constant work in progress. So there's always need for tort reform. There's always need for insurance regulation and changing of laws that may or may not make sense. So I think in the long term, what we're going to see in the next call it 2 to 5 years is we're going to continue to see rates increase until eventually they kind of flatline out with regards to increased costs. But with medical claims not slowing down and commercial auto, repair costs not lowering anytime soon, unfortunately, I think we'll continue to see pretty consistent increases. And I would say that, if I'm delivering 5 to 10% renewals, I'm thrilled to death. 10 to 20, even sometimes 20 to 30. And then if you have claim activity, it can be north of that significantly. So if I'm delivering a 20% renewal right now, I'm pretty bullish on that. So that's the state of the market. But that will eventually soften and that will shift. Insurance goes through hard and soft markets. It's very cyclical. It follows the economy. When the insurance companies have a lot of money and they invest heavily and get larger returns on those investments, they get more aggressive and they want to write new business and expand out. So it is a cyclical type of deal in the insurance world. So, and then when they don't, they tighten up, they deny everything, they decline risks that otherwise would fit their portfolio. They batten down the hatches because they're scared of what the economic future looks like and what their claims ratios, how their claims ratios are operating in terms of dollars in, dollars out. At the end of the day, you have to collect X amount of premium and pay out X amount of claims in order to make sense of the rate structures and increased rates, those sort of things.
What's the one thing that you want our audience to take away from this episode?
I would say just to be more educated about the risks and the items that are in their control, right? Safety programs, focusing on your driver training and education, DOT compliance, maintenance on your vehicles, inspection reports. I mean, just really implementing and becoming best in class. So if you as a business owner can say, hey, I'm doing all these things that make me a better risk than somebody else, you are in the long term going to keep your insurance rates down as compared to somebody who isn't doing all the right things that you should be doing in order to maintain a higher standard of risk characteristic. So I would say that implementing those telematics programs, and just maintaining making sure that you're understanding what goes into the rates and calculating, and then just making sure that you have access to the right carriers. I mean, those are the big things that are in your control. Things that are out of your control, like rates and those sort of things, it is what it is. It's not something that you really have the ability to impact outside of making sure that you're presenting yourself in the best light possible to the insurance companies in order to long-term benefit from, more competitive rates. So that's all. I mean, just knowing and understanding kind of the market space is the key.
So much good information that you shared, Toby. Where can people find you?
Yeah, wisdominsurance.com is, our website. Cell phones 224-213-4648. Emails toby@wisdominsurance.com. Our questionnaire is online. Definitely reach out. We will send anybody the questionnaire, jump on a quick call, introductory call, learn more about what you and your business are doing. And then happy to help people get some competitive costs, competitive quotes, and comprehensive coverage.
All right, guys. Thank you so much for watching, and we'll see you on the next one.